Markets are moving fast, and if you're not reading the candles, you are reading yesterday's news. Welcome to the weekly digest from Investing Angles, where technical precision meets macro insight. This week's theme: a turn is brewing. Dollar. Sudden weakness. Is the decision already made? Yields and bonds. A candlestick tail you can't ignore. TLT. Bulls are cheering, but is the celebration justified? In the US markets, Russell 2000 putting on a bear suit, Dow Jones, Nasdaq, and S&P 500, a multi-angle wave and candlestick breakdown. What sectors are cracking and which large caps are quietly leading the next move? In our global view, prospective monthly closures for Germany's DAX, Great Britain FTSE, Australian ASX, Shanghai Composite, and Hang Seng. Who is leading who in Asia? Indian NIFTY and Canadian TSX. And the spotlight is on Nikkei. Is it about to accelerate down? Two special features: Amazon, breakout or bull trap? Goldman Sachs, is the Wall Street giant flashing warning lights? And we wrap everything with volatility index. Whether you are a global trader or US focused, this digest sets your age for the next week ahead. And today we start with dollar index. This is the candle closure of the week. What we are seeing here after strong Thursday candle, technically it's a bearish harami. We are seeing a confirmation, and the chances for the dollar to move lower are fairly significant on the daily frame. However, the weekly is not as bearish as I would say, because first of all, the previous candle was a clean bullish engulfing, and the current one, the last weekly one, was neither canceled nor supported it. So this is a neutral stance for now. And the monthly frame is very important at this moment. Right now, dollar needs to rally about 1.3% on Monday in order to avoid a monthly bearish closure. But would this be enough? We will see how it happens. So far, this is the long-term chart that we are tracking, and we're tracking it since year 2020. So far, it's been very clean, and I would say it's flawless. Right now, it is sitting somewhere here around this wave, end of wave 4. Perhaps we will see a move lower here, and depending on the monthly and quarterly closure. We discussed this potential in our weekly report that we posted earlier today. If you're interested in interim targets and the smaller time frames, you're welcome to check it. Well, now let's move on to the bonds and yields. So, and we will start with TLT. So this is the candle map for TLT, a very impressive move on Friday, potentially sets a rally here, and if the trend flips here, then we would see a move higher. So far, the move was above the 50 and 100 days moving average, and they potentially can make a bullish cross in a couple of days if the move is continuous. So on the daily frame, we were discussing double top here, and after a break, it looks like we have a pullback, and right now it is sitting right on, the price is sitting right on the neckline, and it's balanced right now. So the next, this candle right now, it is closing on Monday. It will be crucially important about the direction. So whether it goes higher or lower, that would be something to watch for. And from the weekly perspective, I would say that this enormous pull, first of all, avoided a bearish closure below 89.26, which would set a mid to long term bearish trend. Right now, it's we have 4 candles within the green body. Perhaps we should see a move higher. At this point, I would say that on the weekly frame, TLT is neutral, leaning bullish. However, if we look at the larger frames, for example, the monthly frame or the quarterly frame, so far, unfortunately, this is bearish closure. And unless TLT rallies about 2.5% on Monday, the closure will be bearish. And we are seeing the support from technical indicators like 50 over 200 monthly bearish cross here, and the 100 months average line is also moving downward at this moment. So the quarterly, it looks like it's going to be a bearish one no matter what. And now let's have a look at the chart. So this is the chart that we've been tracking until now. So we were talking about two possible paths, the purple one, an ABC here in this target area, and then a wave C upward, or an impulse, the red impulse, 1, 2, 3, 4, 5. So this is what we are seeing. I did some cleanup here, and based on recent moves, made some projection. So far, the wave that started in January has been corrective, and it more and more looks like a zigzag type of wave. So what I would be looking for is potential, if we see all confirmation on the daily, weekly frames, I would be looking for the rally towards 94, 98, somewhere here, and it would probably take a couple of months. That's my perspective. If the bearish path confirms tomorrow, then I would be looking for a red path down. This one, 1, 2, 3, 4, and 5. And by the way, this line 94.85 is an invalidation for the red path. If TLT moves higher, then the red path would be off the table for sure. Well, so far I'm looking for an extended bearish, for an extended correction, potentially a zigzag. So this wave C could be an impulsive wave or a diagonal. We'll see how it develops. So far it is very young for making big calls. This chart is the most interesting, and I have a little story. Once upon a chart, a tale began to unfold. A tale told not in words, but in candles, crosses, and quiet signals whispered by the market itself. The story opened with two ominous signs: the 8 by 20 weekly EMA and 50 by 100 DMA bearish crosses, appearing not by chance, but as a harbingers of what was to come. Then came Friday, delivering a decisive blow. On the daily frame, a tower top was etched into the chart, marking a sudden shift in tone. The weekly responded with a powerful hammer. Some may call it a gravestone doji, casting serious doubt on the possibility of a near-term move higher. As the pages turned, a bearish flag emerged on a two-day frame, elegantly shaped and precise. It pointed the way to a likely destination, a yield pullback to the 3.974 to 3.911 range, a level supported by multiple technical standards. But every tale has a twist, and this one centers on the monthly frame, the keeper of the longer arc. While the monthly candle isn't screaming panic, it's also not entirely innocent. Should it turn lower, it would likely find a refuge at the lower Bollinger Band, coincidentally or perhaps poetically, the very same level projected by the bearish flag. And there, at the boundary, the yield might find its footing. Should it happen, a bullish flag may start to form on the monthly chart. A quiet, patient structure, hinting at a continuation of the long-term rally. It wouldn't be the first time the market paused before pressing forward. And as the plot deepens, a question lingers in the background. When will the powers that be realize that cutting rates no longer works? When will they pivot? perhaps sharply, with emergency hikes as the market stumbles. History shows that panic often drives clarity. So we wait, chart in hand, listening to the story unfold, page by page, candle by candle. The end? Not quite, but for now, that's the fairy tale as told by the charts. And now let's have a look at the Elliott waves. This is the 20-year government bond yield. We were expecting it to try and rally. However, the recent moves, especially by the candles will be the next chart, suggest that we should look for perhaps a flag. And I would say that this could be a flag if it moves down and confirms a bearish reversal. So this would be a flag that we would be looking for. And in our case, we would be looking for an ABC type of formation for this flag. And now we can, once we have all the elements, we can try and chart the target for this flag. So I think it should be fairly simple, somewhere around here. That's the perspective for the 20-year yield. And let me mark it here. This would be the targets. Obviously, this move would be mirrored by TLT and something that we just discussed. So this is the bearish flag for the yield, and a bullish potentially move for a zigzag by TLT. That's the perspective. Now let's have a look at the candles and see what kind of support we have. Well, that is a bearish picture, quite frankly, and the chances for a move lower at this moment are fairly high for 2, 5, 10, 20, and 30-year yields. And I would say that these crosses, 50 over 100 days moving average crosses, freshly made, they would reinforce this move for at least a couple of weeks, maybe longer. And another question that kind of concerns me at this moment, this is the spread 10 minus 2 year constant maturity. So what we are seeing here, this is the chart that we've been tracking, and right now, after an impulse down, we have a corrective wave, and there is a possibility for another impulse down, which would probably cross the zero line, and the spread would become negative. That's the perspective for the spread. Let's move on to the next chart. So the commodities section is not in this video. I recorded it earlier yesterday for oil, natural gas, gold, silver, uranium, and also did a special one for coffee and palladium. So if you're interested, I will put the link at the end of this video, and you can also view it on our channel. It's available right now. So now let's move on into the stock market, and we'll start with Russell. What I'm seeing here is that Russell is the most bearish among all indices at this moment, and that's why I have this lovely picture here, like saying hello. This is the candles. So what we are seeing, a strong bearish closure on Friday on the daily frame. The weekly frame moved below the 200 and closed below the 200 weeks moving average. It looks like on the end 8-day frame, it will be the 50 periods moving average will be lost. The monthly is losing the 50 months moving average. I think the last time it happened in year 2022. And what I would say that in order to reverse it, Russell needs to rally about 8.79% in one day on the last day of the month, March 31st. And on the quarterly frame, it is also a strong bearish formation. And in order to mitigate it, Russell needs about 11.5% rally in one day, which is plain impossible, let's admit it. Now let's have a look at the charts, and we will start with this lovely chart that we crafted on February 12th so far, and it's been practically unchanged. So anybody else is seeing something similar from other services? I would love to see it too. Well, this is the chart, and this is the wave, and we are looking for another wave down. Potentially this would be wave 3, or there is also a possibility, because with wave 4 was quite significant, there is also a chance that this would be the entire impulse down, and I would be also looking for this potential as well. Let's see how Monday goes and what kind of wave Russell develops. Speaking about slightly bigger picture, this is the chart that we shared way back in November with our subscribers, saying that Russell is no longer going upward. So, and this is what it did. It built a top, and right now I'm seeing this as either in blue count or in green count. There is because it made a higher high here, there is also a chance that this was a wave 5 of a much larger degree, and there is a possibility of a much larger move. And in order to understand this type of move, we need to zoom out big. This is our probably most favorite chart, and this is how we started. This was the call in January 5th, 2020, when Russell was 1660 something. We said that there is a very good chance it goes below 1200 and perhaps even around 900. And you know what happened next? You all probably remember that Russell, this was the moment of the call, Russell moved here to 966. It was quite a call. I don't believe anybody else seen this picture, and this was probably one of the best calls, early calls. So then what happened then? We discussed this chart in January 5th, 2025 with our subscribers as well. So we were saying that there is a good chance that we are looking for a reversal here, and this is exactly what is happening right now. So Russell is reversing and is already close to our target, which the wave that is forming, it's going to be either wave C of a bigger impulse, or wave A of a bigger correction. We will look at it once we have a complete wave done. And speaking about some technical events, Russell is on track for forming the monthly MACD bearish cross. And this would be the first among all indices at this moment. So this is a very strong event, and by our estimates, we would be looking for a decline of somewhere from 27 to 42% losses based on the previous history and some statistical estimates. In order to reverse this cross, a rally of 12 to 15% is needed on Monday, which is again impossible, and let's say that the cross is committed already. Now let's have a look at the other indices, and we'll start with Dow Jones. And we'll talk not only about Dow Jones, but we'll also talk about Dow Jones Transportation Index. So this is the chart, this is the kind of map for Dow Jones Industrial Average. We are seeing a strong move below the 200 days moving average, and the final decision on the cross 50 by 100 days moving average. It looks like it starts diverging. And the double top that we discussed earlier this month, we're saying March 15, that there is a double top and there is a good chance that it is going to happen to move lower. So the green candle wasn't able to negate it, and as a result, we are seeing a very strong rejection here, and 8 by 20 MA bearish cross, and a very good chance to move towards 38.9, which is a typical target for double top formation. Speaking about the monthly frame, so far it is looking fairly bearish. A closure below this line would mean a confirmation of a top on the monthly frame. Now let's have a look at the Elliott waves. This is the chart that we've been tracking for 2 weeks. So far it's working very nicely. This is the original target here. Dow Jones moved slightly higher, and I am considering this as possible wave 4, and now we are looking for another wave down to complete the impulse. If the impulse is not complete, we might see a wave A, B, C here for a bigger wave B before the next move down. That's the perspective from the short term, and the long term is the chart that we shared early in January 3rd, saying that the Dow is about to reverse. This is exactly what it did. The chart is 2 months, and it's very slow moving. Obviously, many people didn't have patience to wait. And based on this chart, I'm saying that the best case scenario here is Dow Jones to hit 36,000. This is the best case scenario for multiple evaluation that we have here. And obviously the worst case would be somewhere here in the red rectangle, which would be the level of the wave 4 of the previous degree. And now let's have a look at the Dow Jones Transportation. Dow Jones Transportation, it's bearish on the daily frame. It is rejected any bullish potential of this doji on the weekly frame, and the monthly is plain bearish. In order to reverse the monthly, Dow Jones Transportation needs about 10.5% in the last day of the month, which is plain impossible. And this is the chart that we've been tracking for a while, since when? Since November 14th. So since the middle of November, we said that Dow Jones Transportation is done with an upward move, and now it is moving down. So far, the chart works perfectly, and nothing to complain about. Well, and if you also follow Tesla and our calls on Tesla, you might see a very similar chart, which was inspired by Dow Jones Transportation and a few other charts, particularly from the Practice book on Elliott Waves. This is the Tesla call on January 11th, and this is how it ended. So this is not the latest chart I have, that's March 15, but nevertheless, it hit our target. And right now, we will be talking about Tesla just a few minutes later in our S&P 500 section. So that's about Dow Jones Transportation. As no changes in our estimates, it is moving towards this target. It's already lost over 16% after our call. The next index we are going to be talking about is Nasdaq. What Nasdaq did, and many argued at the beginning of March, Nasdaq formed a 3 black cross on the weekly frame, and I emphasized multiple times that this was the strongest ever formation that I've seen on the weekly frame by Nasdaq, and this formation was greatly supported by multiple technical indicators. This is the big driver of the bearish move and what is happening right now with the index. So what we are seeing here is the bearish closure on the daily frame, on the weekly frame, and the monthly is also set for a bearish one, and the quarterly unlikely to be avoided. So this is a bearish engulfing on the quarterly frame, a very strong signal, which means that the next quarter will be bearish. Speaking about technicals, this is MACD bearish cross. Nasdaq is very close to forming it. So it is right now sitting 14 basis points apart from turning, from recording it on March 31st, and even a little move lower here might be decisive, and we will see the next move, the next bearish cross. The first one will be done by Russell, that's for sure already, and this one is still questionable. Speaking about the charts, Elliott Wave chart, the bigger projection, this is what we are seeing here. So far it is Nasdaq is moving downward, no questions asked here. The only concern I have that this wave that started in October 2022 could potentially be an non-overlapping ending diagonal. This is a possibility because I'm not seeing quite clear impulsive waves 1 and impulsive wave 3, especially the middle section here. It's not, and I'm talking about this one. So it's not entirely impulsive, and it also happened to be the shortest among 1, 2, 3, 4, 5. So these are big breaks of the rules of Elliott Wave rules, and there are many questions about the structure. So if this is potentially a diagonal, then in this case we would be looking for this type of return towards 10.5K for Nasdaq. Let's see what happens. And speaking about the short-term chart, this is the one that we've been tracking since the end of February, when we clearly identified the truncated, but potentially truncated top, and we were saying that the index is about to move to 19.6. So as we are talking right now, it's 19.361. Well, that's quite a close call, I would say. And this is the chart that we shared late night with our subscribers on March 27 on Thursday. So what happened on Friday, you all know. This is what was the move, and now the chart looks like this. So I'm looking for a potential top by Nasdaq in the middle of December. So it could be the purple path, I think the lucky one, A, B, C correction, and completion here of the overall correction and restart of the rally upward. However, based on the technicals and candles, I think that the purple path is on the lower side of probability scale. Most likely it's going to be either the blue one. I think the worst case scenario, because it would be the impulse one, not impulse, that's a motive wave, but a diagonal, a leading diagonal, wave 2, potentially wave 3, 4, and 5, and this would be just the wave A of a much bigger correction, or a move here towards 18 to 16.5K for wave C of A, and this will be either a bigger correction, but not maybe as sharp as the one with an impulse. That's the perspective for Nasdaq, and now let's have a look at the S&P 500 and what we are seeing here. This is the long-term chart. We'll start with this, and we finalized it at the beginning of January, so nothing changed here. We were looking for two potential counts. First of all, it's this is potentially wave 3 of a bigger, of 1, 2, 3, 4, 5 of an impulse here. If S&P finds support somewhere here and starts a rally, well, this is it, then the green pass. But if S&P moves below this 4818.62, it will break the green count, and we would be looking for a much lower perspective, possibly here 3400 to 2750. That's difficult to digest, but this is indeed what Elliott waves and Fibonacci levels are telling us right now. This is the short-term chart. This is what we shared with our subscribers a couple of days ago. On March 26th, we said this is going to be wave 4 potentially, and now we are looking for wave. We completed an impulse here, and we're looking for wave 2. Wave 2 completed here, and I would say, and I said that this is a big concern because it was a truncation with an ending diagonal C here. And this is the chart that we shared just on Thursday overnight before this big move that happened on Friday. So far, the chart has been flawless, and I hope our subscribers and customers were quite prepared for these moves and know what to do. Speaking about the midterm frame, this is the chart that I'm tracking right now, potentially top ABC formation. This is the lucky pass, but this would be a most likely a zigzag formation, and I would say there is a very good chance that this would be just wave A of a much bigger correction. That's the perspective based on technical indicators and candlesticks. Speaking about this chart, this was somewhat similar to what I discussed with Nasdaq, but maybe on a smaller degree. This is a diagonal, ending diagonal that S&P 500 formed since August 2024, and we highlighted this potential pass in the middle of December, saying that the index has a very good chance to move lower and towards this level. So 5120 is an interim target for this one. If it breaks down, well, that would be absolutely normal. And now what kind of support we have from the candles? Daily, 2-day, weekly are playing bearish, and weekly just lost. Looks like it's finally lost the 50 weeks moving average. And the monthly frame, I mentioned it multiple times, so a closure below the January low would be bearish. A closure below the November low would be then bearish. Well, it looks like we are looking for a very strong bearish closure on the monthly frame by S&P 500. And this is the monthly closures of all 4 major indices: S&P 500, Nasdaq, Dow Jones, and Russell. So nothing bullish in sight. Now let's have a quick look at the monthly potential closures for major sectors of S&P 500. Financial, technology, healthcare, consumer discretionary, industrials are plain bearish, and I highly doubt there is enough power to overcome these bearish candles on Monday. Consumer staples and utilities are somewhat neutral bullish with a chance of being bearish, but I would say that most likely it's going to be like a horizontal or range bound move for them, perhaps even a minor rally. So this is closer to neutral, slightly bullish. Energy sector, I would say this is a very nice setup of falling 3 methods. Here we have a month's bearish engulfing, then 3 failures, and now the next month would be strongly bearish. That's the perspective for the energy sector. If we look at the large cap stocks, Microsoft is bearish, and unfortunately it looks like that after this gravestone doji, which we highlighted back in December, these three candles are somewhat similar to three black crows, but not quite, but very close. Anyway, so Meta is forming a tower top. Amazon is confirming a breakdown. Nvidia is also confirming its bearish move. The same for Google, Apple. Tesla is bearish. Whoever is looking for reversal here might be disappointed. I would say that if the Tesla closes below the February low, it will be a bearish closure. Let's see how it does in the last day of the month. And an interesting, Berkshire Hathaway, it formed a very bearish candle on the daily frame. If we look at the weekly frame, it is 1, 2, 3. It's an advanced block. So technically it's a bearish formation, but it would need a bearish confirmation on the weekly frame. And if we look at the monthly frame, it is possible deliberation candle. We have a small green, big green, and small green. Possible deliberation. Again, we would need a confirmation on the monthly frame for this. So it's kind of neutral, leaning bearish, requires a big confirmation. And now let's have a look globally. What we are seeing here. First of all, the German index, it's probably setting for a spinning top, but I would be looking for a good confirmation for this one. It's not very clear. France, it is, if it closes at this level or lower, it will be the dark cloud cover or perhaps a bearish engulfing. Depends on how deep it drops. The UK 100 looks like it's set for bearish engulfing. Australian index, I think nothing will change its mind, and it's going to be a confirmation of a bearish reversal. TSX, I highly doubt it has enough power to overturn this bearish candle. NIFTY, it's very interesting position right now. So if it closes with a candle above the open of above the February's open, it could be a reversal. But a failure, I would say, if it moves lower here, it would be a bearish continuation. Let's see how it does. That's a very interesting one, and I'll probably run a special case on this one. Shanghai Composite, amazing structure. So what we are seeing here, a very strong dark cloud cover or belt hold. 2 months of failure. So in one failure, then we have a bearish engulfing, and we have another 2 months of attempt to recover. I think that it is set for an epic fail here. Not epic fail, epic move down. How big is gonna be, it's difficult to say, but I would, okay, so this would be, so this candle is like 10%, so maybe it's another 10% down. That would be something. And speaking about Hang Seng, it's a deliberation pattern here. I would say it's going to be bearish, but we need a confirmation on the monthly frame. So patience required for the next 4 months. However, we can have a look at the weekly. The weekly, no, it's not confirmed also. So I would say it's right now neutral, pending confirmation for either path. And the special feature of today, it's Nikkei, Japanese index. It made a strong move down on Friday and flipped 8 by 20, made bearish cross. A few weeks ago, it made a 50 by 200 and 50 by 100 bearish crosses. The weekly closed with a strong bearish engulfing, and the monthly, it looks like it's on track for a bearish continuation candle. Speaking about the chart, as I discussed in February, at the end of February, this is the perspective for a move down, and it's already approaching the minimum target, 35K. So, but considering the chart and considering the structure, it wouldn't be surprising if it ends somewhere between 38 and 28, 31 and 28K in a couple of months. That's a very short perspective. And now let's have a look at Amazon. Another special. So on Amazon, we made an amazing call on February 4th when Amazon was 242. We said this is the top. And Amazon moved lower and it's already lost 20%. If someone didn't notice, it was fast and sharp. So in this case, in our case, I think this is close to the end of wave A or 1, and it might start moving higher at this moment. Speaking about the short-term chart, this is the perspective. This is wave, the impulsive wave down, and I would be looking for perhaps slightly bigger wave 2 or B, and in this potential pass. This is if Amazon doesn't make a lower low here, but if it does, it will just extend potential impulse wave 1 or wave A. That's the perspective for Amazon. Let's see how it handles on Friday. So if it makes it the new lower low here, I would be looking for a bigger wave A, B, C, potentially something like this for maybe a couple of months. But again, we need to see how it closes on Monday. And so far, Amazon candles don't look impressive. They are bearish, and the loss of 50 weeks moving average on the weekly frame, a freshly made 8x20 MA bearish cross, and the confirmation on the monthly frame of a reversal. This is what happening. And now let's talk about Goldman Sachs. Again, this was our early warning in November saying that Goldman Sachs is close to forming a top. It went a little higher then, yes, but now it looks like it is forming a very strong candle down, and it would be looking for these targets. The question is what kind of wave it's gonna make. So far, this wave 1, 2, 3, 4, potentially 4, and potentially wave 5. If it makes this impulse, and I would say that the Monday will be extremely important from this one. If this makes this impulse, this would be just wave A of a bigger correction, and I would be looking for this particular structure. So this would be wave A, and I would be looking similarly to what Amazon, what I am looking for Amazon. This would be wave B of a correction, and well, it could be a different shape because right now it's I'm placing a zigzag here, but it could be a flat, for example, or even a triangle for this type of formation. And we would be looking for a much extended correction, for much lower, for much bigger correction. And speaking about the Goldman Sachs candles, the chances for the monthly frame, the chances for a monthly closure or bearish closure are fairly significant. So if it closes below the January low, it would be a confirmation of Harami cross here, with a very good chances to move lower in the next couple of months or even quarters. This is for special features, and the final one I'd like to discuss is volatility. What volatility candles are telling us? The Friday's closure was very bullish, no questions about it. Many technical indicators flipped bullish and supported the move higher. On the daily frame, if we look at the 2-day frame, we have a very clean tower bottom on the 2-day frame by the index, and the same on the 2-day frame tower bottom by the futures. If we look at the weekly formation, futures closed with a bearish, with a bullish engulfing, closing above the 200 weeks moving average line, which is quite rare, I would say. And the index itself closed with a strong piercing line, which is a bullish candle formation. However, it would require confirmation. If we see the next week bullish, it wouldn't be a surprise at all. Well, that ends up our discussion today. So from the dollar's reversal hint to the Russell's possible breakdown, this week was packed with market signals and risks hiding in plain sight. So what do you think? Is the Nikkei setting up a deeper fall? Are bonds quietly building the next big rotation? Drop your thoughts in the comments. Test your knowledge with our quiz questions, and we try to do tricky quiz questions. Depends. Let's talk setups. What's your top watch list name right now? And a big thank you to all our 10,000 plus subscribers. You are the reason we keep raising the bar. Join our private Discord for real-time calls with Master Trader Kyle and Swing Trade Room alerts with Master Trader David. If you like what you saw, smash that like, hit subscribe, and ring the bell so you never miss the next shift. Share with your trading circles who needs a roadmap, not just noise. Until next week, stay sharp, stay objective, and happy trading. And remember, at Investing Angles, we chart the turn before the herd even flinches.